You ain't ready. I'm not going to speak on that.
Find out and try.
You're not advanced enough. You don't have to always work.
I do agree with you.
This is the easiest and safest way.
When I look at some of the richest people in the world, how they hold their wealth, where they store their money, it's in real estate. Real estate almost always wins.
Welcome back to the Winners Club podcast, where even when we don't win, we learn. And today we want to talk to you about real estate investing for beginners and the intermediate investor. Let's get it. My name is Brian Tran, serial entrepreneur, but I also own a bunch of rentals. I got my co-host, PJ.
Yo, what's up, guys?
Special guest, co-founder of 50 Hills Real Estate, selling multiple high-end $1 million homes, investor himself, Brandon Tran.
Thanks for having me again, boys.
Let's get it. So today, guys, our podcast, as you know, is a business podcast, and real estate is a business if you run it correctly. So let's kick it off. I want PJ to ask some new questions, but you're a new investor. You want to buy your first property. Where do they start, Brandon?
I mean, there's levels to it, right? It depends.
Well, from the beginning. Come on, new guy.
New guy. How much is a new guy? How much are you making?
All right.
How much you got saved up?
All right. He's making about $160,000 a year. He's got about $200,000 saved. No, you know what? Scratch that. He's making about $100,000.
Yeah.
Okay. And he's got $50,000 set aside.
All right. And so it all kind of starts with their goals, right? So if they're trying to buy their first house, there's options. They can go for the super beginner. There's something called an FHA loan.
What does that stand for?
Federal Housing Administration.
Something like that. Doesn't matter.
Like
We're so used to calling it FHA that it's FHA. Basically, first time home buyer. Let's get it.
Yeah, basically what that is you could put down 3% of the purchase price.
3.5, I think.
Yeah, 3.5, 3. We don't do too much of it in the Bay Area. Before, it was pretty much non-existent with how competitive things are. But now that everything's kind of slowed down, and now that there's stuff sitting on the market, there's actually an opportunity for that. Yeah. So a good benefit of this is you're putting a really low down payment, and you're able to get into a house with putting very little money down. The other drawback is your monthly payment is going to be higher. So you got to think about, from that $100,000 that you're making, how much are you spending a month, and how much are you able to put that towards a payment?
In real estate investment, you got two options, right? You're either buying for appreciation or you're buying for cash flow, right? So those are your first two criteria. Let's keep it real simple. If you're buying for appreciation, go down Brandon's route. I think that's a really good route. Get into the house. You can afford it. Buy it. Put some roommates in there, assuming you buy something with multiple rooms. House hack the hell out of the house. Keep your living expenses low so that you can go out, stack more of your $100,000 that you're making, putting more aside so that you can go out in another year or 2 years, you go buy another property. Real estate is a numbers game. Let me tell you why. Real estate is a numbers game because if you only have one house, one door they call it, right? That's the lingo. If that one tenant doesn't pay, you gotta pay.
Yeah.
Not a very good business. You know what I mean? So when you have numbers, when you have more doors, more homes, let's say you got 5 and one guy doesn't pay, the other 4 covers the one that isn't paying.
Yeah.
So it's about diversifying risk. Now, I understand you're not going to get to 5 very quickly, but it does start with 1.
Yeah.
That's if you buy with appreciation, okay? If you're buying for cash flow, now San Francisco isn't really a market for cash flow. You got to kind of leave the state or go out into like Sacramento or a little bit more out in the boonies, and that's okay. You can buy things out of state. You don't have to be there and touch it. You can hire property managers. Now, with that, you want to definitely try to find something that is going to cover the rent, the mortgage, cover the property taxes.
At minimum.
And then you're going to cash flow about $200-$300 a month. That's pretty good.
Yeah.
You get 10 of those, that's $3,000. And then in 15 to 20 years, if you're paying them off pretty quickly, now you got 10 paid off homes, making you a lot of money.
Okay.
Yeah, you like that?
Got
Nice
from
and easy,
basic to
quick.
advanced really quick.
Well, we're just gonna throw it out there. But now, PJ, I want to open it up to you and ask some questions because you're thinking about investing. It's in the horizon.
Yeah,
what questions
definitely.
do you have?
I mean, let's bring it back because you guys are obviously seasoned realtors. You guys know what you're talking about. You guys have big words, you're throwing out here, but let's take it back. And I want to ask you, why should somebody even invest in real estate? Like why invest in like a home or an investment property? Like why don't I just put that money and go vacay or just enjoy my life? Like why would you say like it's good to get that investment property? What are the benefits of it?
Yeah. Go ahead, Brandon.
I mean, for me, it's just, when I look at some of the richest people in the world and how they hold their wealth and where they store their money, it's in real estate. And that's been proven time after time, decade after decade, that real estate almost always wins. Right? It's a safe asset. And it's something tangible, right? You got all these crypto millionaires out here, FTX, right? Boom.
Yeah.
All your money just disappeared. You might have had $10 million. It's gone. They lended it.
Yeah.
Your $10 million house, it's going to be there still.
Yeah. Yeah.
And you could always move it.
For sure.
No one's taking it. So that's the big higher level picture.
Yeah. What's your opinion, Brian?
Well, I'm not against taking vacations. I'm not against blowing money, but definitely you got to ask yourself, if you're working for money, you're trading time for money, eventually you have to get out of that mindset and get out of that rat race and have something that is going to throw off cash so that you don't have to always work to earn a living.
Yeah.
Right. And there are a lot of ways to invest. Stocks, but then crypto, but they're all very risky.
Yeah.
I personally invest in a lot of businesses, but again, that requires a higher level of risk. So for the audience out there, this is the easiest and safest way, in my opinion.
Yeah.
It's buying something that you can touch, that is needed, that will not be wiped out. You can put your money in stocks, but the problem with stocks is you're rich on paper. And if you need access to that money, you have to sell the stock. With real estate, you technically never have to sell the stock to reap the reward.
Yeah.
Because if you do it correctly, it's paying you a few $100s a month. And then when the appreciation goes up like crazy and you buy a property that's worth $500, now it's worth $800,000, you can tap into that equity that you have in the form of a cash out refinance. And that is tax-free money.
Yeah.
You're not taxed on money that you borrow. Now, if you sell the property and you reap the reward, you have to pay taxes, capital gains. But that's why I like it. It's safe.
Okay. For sure. I mean,
It's safe if you know what you're doing, actually. But,
yeah, of course.
everything is
Right?
gonna
With
be-
everything, right?
relatively, like I bought stocks and I'm down 40 grand in one of my portfolio.
Yeah.
I can't do anything.
For sure.
Yeah,
I think that's, what I realized, like, everyone's always going to need a home.
Yeah.
Sure, we're in recession time. It might go down, might go up, might go down, might go up. But it's always done that. But people will still always need the home. And I don't think that's ever going to change.
You have to buy it right.
Yeah.
Right? You have to buy, the deal is in the buy, not the sell.
Okay.
So, for example, what they mean by that is that you don't make your money when you sell the property. You make your money when you buy the property. So you got to make sure you're buying a property for a really good deal. That's what it is.
Gotcha.
What other questions, PJ? Hit me.
I'm gonna hit you. So you kind of answered one of my questions because,
Sure.
My first question that I wanted to ask was pretty much like, can you really make money like off real estate? Because, I know, people say it all the time, but for me, I never really knew, what are the ways that you can make money in real estate if I bought a house, say, like today?
Real estate is a long-term game. Now, there are some things that you can do to make short-term cash. Airbnb, if your city allows it, corporate rentals, those things will generate higher cash flow. But realistically, it's the principal pay down, which means you're paying down the debt on it, which gives you depreciation, which saves you money on taxes, the cash flow, and then the appreciation of the actual assets. But that takes time to materialize. So if you're going to buy one real estate today and think you're going to be like, I'm rich,
Yeah.
unless you stole the property,
Yeah.
it's not going to happen.
Even
Yeah.
if you steal the property, they'll probably reassess you anyway.
Well, that's the property tax, but it's not as easy as that. But if you do stick with it and you continue to buy, let's say you're 25 years old, you buy your first property. By 27, you buy the second. 30, you buy the third. But here's the cool part. Once you accumulate a good amount, like 3, 4, 5 that are cash flowing, now it gets easier to buy properties because
Look at all
you're making, like going back to the example, you're making 100,000.
Yeah.
Now, I was making 100,000 at 25. Now at 30, I'm making 150. Right? That's reasonable. But now my property's making 400, 300, 400.
Yeah.
So every month I'm bringing in like 444. Just simple math. 1,200. 1,200 times 12. Right? That's 100. That's 14,400.
Yeah.
And if you're in a cheaper market, that's almost like a down payment on a house.
Yeah.
So you can literally keep buying.
Yeah.
That's the cool part, but it takes time.
Yeah.
Be patient. Real estate is a patience game. Buy right, keep your head down, keep buying, run it right, hire good property managers if you don't want to do it, and watch it accumulate. It's about accumulating.
Yeah. For sure. For sure. Yeah. I want to ask Brandon this: is equity like really like the juiciest part of like real estate, right? Is that like the thing that people like look most forward to? Like,
It's like Brian was talking about. It's either the equity or the cash flow.
Yeah.
Right? There's two plays. And where we're at in California, you're going to have bigger equity because everything's worth so much more. But because everything's so expensive, the cash flow sucks. Versus you go to like the south, southwest, southeast, it's cheaper to buy down there. The property value is going to grow a lot slower, but the rents are high.
okay.
So you're going to make more money every month. So you're going to make one money on one end or the other. The best if you could buy it cheap here and rent it high, then you're winning, right? So like I said, it's in the buy.
Gotcha. Love it, man. Appreciate it, man. I'm getting pumped. About to buy
I
a
want
home
to
right
share
now.
a story, right? Like going back into, it's a long term. I bought my first property either 14 or 15, 2014, 2015, right? It's been 7 years. Maybe it was 15. I bought it for $380,000 at the time. It was a 3-bedroom, 1 bath, but it needed some work to become a 4.2. Long story short, I bought it for $380,000. I put like $30,000 down into repairs, so I was in it for 10. Okay. That 410, because the way I chopped it up and I rented out the rooms, that property was generating like 4,000 something a month. I got a stated income loan. If you don't know what that is, basically you tell the bank how much you make, because I didn't have 2 years of tax returns. So they charge you more for that kind of loan because it's not conforming. It's not like the norm. I was paying 5.5% interest rate for an adjustable rate mortgage, a 5-year adjustable rate mortgage, which means that for the first 5 years, it's locked in at 5.5% every year after. So the 6th year, the 7th year, it adjusts. So it can go up and it can go down. So that's high, right? For all those people listening onto this podcast, like, oh, interest rate's so high right now. I was paying 5.5 on an ARM. Okay. The mortgage there was $1,800. So you do the math. I was getting like 4,000 something.
Yeah.
I was making $2,000 a month. That paid for, I didn't even live in the property.
Yeah.
That paid for my little in-law that I was living in San Francisco.
Yeah,
and
chilling.
my 2013 black Honda Accord Sport, which was $321 a month.
Yeah.
With lifetime powertrain warranty from Honda of Oakland.
That car made some money.
That car made me money too. Side note, that car got hit so many times, but every time I got hit, I got paid from the insurance. So whatever.
It had to be like a tradition then. You're just like, hit something, get paid.
Yeah, so today I just re-rented those out. I built an ADU in the back. It's now bringing in $6,500 a month, but I paid down a lot of the mortgage.
Yeah.
My mortgage, I just refinanced it when the rates were low for 3.25. My mortgage is $800. I make $5,000 off that property.
It's nuts.
Right? But it took 7 years.
Yeah.
So now $5,000 net to my pocket is $60,000 a year. I make what people make in a year off of a property that I don't really do much work.
Yeah.
That, guys, is the beauty of real estate. I mean, but again, I don't know. I didn't know that the market was going to appreciate. I didn't know that the rates were going to hit this low. But who does?
Yeah.
But if I didn't buy the property, I wouldn't be in this situation making $60,000 a year.
Yeah, I think it goes back to like, you know, what are you going to tell yourself? Are you going to tell yourself like it's not going to work or it's going to work?
Yeah.
You know,
Yeah,
you got to
I
kind
mean,
of find out and try.
You just got to take the plunge. I mean, because a lot of people are always like, let me time the market. You know? Let me wait for the bottom. Let me wait for the bottom.
I should have bought a property back then.
You never
I would have
know.
been rich.
You never know.
My daddy said that a lot. That's why I was like, yeah, you're right. I'm buying.
So let's go. I want to transition and ask you. Little Timmy's back over here, and little Timmy wants to know. He's like, hey, Brian. Hey, Brandon. I ain't got no money.
Yeah.
But I want to buy an investment property. Can I do it?
I would advise not to do it unless you have money.
Yeah.
Because, I mean, like today we buy a lot of properties. But we buy properties not utilizing our money. We have investors now.
Yeah.
But it took years before I was like, okay, we can take on investors. Why? Because I don't want to be responsible for people's money.
Yeah.
Like if I'm going to do it, I got to have a track record. I got to make sure that I'm actually returning my investors' money. But if you're new and you're risking people's money, you might screw up and put your reputation on the line.
Yeah.
So go out there and make some money first. I mean, I know $50,000. A lot of people are going to hear that and be like, man, how am I going to have $50,000? Figure it out. Go wholesale properties. Go do something. Go save money.
Yeah.
It's good to have a goal. Like have a goal to save $50,000 or something like that and go invest in property.
Yeah.
Yeah, save it, and then, you know, the more that we've been in the business, we realize some people, they just don't have the mindset or the capacity to own real estate. You don't have to buy the actual real estate. You can go in with these other bigger groups. There's people that they call it syndications.
But then the syndication doesn't really apply to little Timmy because you got to be an accredited investor.
Yeah, but once say,
well, you can invest with
Timmy gets a
Uncle.
job,
I don't know if Grant Cardone's still doing it, but Grant Cardone was taking like
he's
thousands.
taking he's taking non-accredited now. You know, so that's one way. But I do agree with you. I think it's better save your money.
If you ain't got money to buy real estate, you ain't ready.
Yeah.
Right? Like that's what it is. You're not ready.
I think I was because I had this conversation with Brandon before too. I was like, Brandon, I'm trying to buy a home, trying to buy something. Like I want to invest. And he's like, all right. It's like, how much money you have saved up? I was like, I got like $2,000. So yeah, definitely. I mean, you gotta have it. You gotta have it. You know, I feel like there's a lot of ambitious people who want things, but you can't skip the step. You need money. You need some money.
It's different. Like if you were to say, hey Brian, if you lost everything, what would you do? I would then go, like knowing what I know now.
Yeah.
I would go raise money. I wouldn't need money to buy real estate. And Pittsburgh, no money.
Yeah.
Pittsburgh deal, the Daly City deal, the Gateway deal, I put out like very minimal.
Yeah.
That's because that's years of doing it, knowing how to structure it, knowing how to be safe. And also just like, you know, if I needed to, I could always put my money in, but I don't need to.
Yeah. I mean, that's a completely different story, you know, because you've been in the game for about 10 years. So your knowledge can get you there, you know.
Yeah. This kind of came from, I mean, we talked about this on another episode, just like get your knowledge up.
Yeah.
Right. So being able to do all these deals and figure out how these other people are able to structure these transactions, that's how we learn. And then we're able to, you know, reposition ourselves and use those same strategies.
Cool. Yeah.
You want to bring it up to the intermediate a little bit? Let's bring it
up to intermediate. Like,
and then we'll end the podcast. But okay, you're a little bit more advanced. You're like, you know,
I got one property.
Yeah, you got a couple properties.
Does that make me intermediate after I got one property? What do you guys say?
You know, honestly, you got one and you actually dealt with tenants and you know how to deal with, you know, the financing part and you know the lingo and you're confident.
Yeah,
I would say you're intermediate. Like if you can buy properties like how we buy properties, you know, we know if it's a good deal or not right away. We can pull the trigger. We're not afraid. We take, you know, good risk. We minimize risk. Then I would say you're more intermediate.
All right.
You know what I mean? You know, sometimes I know people who have properties, but they can't pull the trigger on the second one.
Yeah.
Like once you realize that it's not the money, but it's like the actual deal, then I would say you're intermediate. But if you're still tripping about, oh my God, how am I going to buy $1 million property? You're not advanced enough. Because when I look at a property, I don't care about the price tag. I care about, okay, what's my play here?
Yeah.
Like is it costing $1 million, but it's bringing in 20 grand a month?
Yeah.
That's a good deal. And the expenses are low, right? So, that's when you become a little bit more intermediate.
Okay.
All right.
It's a little different when you're buying for yourself and buying it for your investment.
Yeah.
Yeah. So I would say intermediate's like this. Advanced, I would say you're so rich to the point where now you're just buying grade A buildings, which are like skyscrapers and nice Avalon apartment buildings where they don't cash flow a lot, but you're so rich that you just need it for your tax benefits. That's advanced. We're not there. I'm not there. I'm not going to speak on that. I'm going to speak on the people that are like, okay, now you got a handful of properties. What should you be buying? How should you be looking at things? And I think the next thing is like, okay, now you need to look at buildings that need value add, which means you buy properties that are making money, but they could be making more if you cleaned it up, if you remodeled some of the units, if you just brought in higher paying renters.
Yeah.
That's what I would go for next.
Yeah.
You want to talk about how we find those deals?
How do you find those deals, man?
I look for tired. Like the tip is I look for older people who own them. So you can go to title. It's just one tip. There's a lot of ways you can do searches, but I go to the title company. I ask for multi-unit buildings, 5-6 units and above. And then you go and you ask for people who own in their individual names, not LLCs. Because, some chances are if they're in an LLC, they're sometimes like more advanced. They kind of, they might be young. But I go for the old 70s. Start with like 70s and then work your way down if the list is small.
Yeah.
Chances are those guys are tired. They don't even go there anymore. They're so rich. They're like 70 years old.
Yeah.
They've made their money. They lived a good life. They're like, oh man, I'll sell this. Brian, what do you want for it, Brian? I'll sell it to you for whatever.
Yeah. Yeah.
Give it, something like that. Brandon, what's your tip?
Yeah. I mean, that's it. Just gotta go out and, if not, find a good realtor. Right?
Yeah.
If you're too lazy to go shop online, find someone, tell them what your goals are, and have them help you find it. But I mean, we're going out. We spend so much time in the field that when we drive by a house and it looks tired, we got a guy. His name's Ray.
Yo,
we tell Ray, call that house, get it for us.
Sure.
And it's just about
Some of our best deals have always come from older owners.
Yeah.
And it's not that they were like, we didn't rip them off. They were just like, man, just at this point, I have so much money in the bank. I'll give you a deal because will you make it easy for me? Do I need to do inspections? Like, do I have to list it or just buying it directly from them? They don't care. I mean, and you got to think of it this way. Like, you hit a certain point, like, for example, Brandon, if when you were a kid and you had 5 sticks to a gum pack that was 25 cents, you asked that kid, let me have one. He'd be like, no. I just spent my last quarter on it, right?
Yeah.
That's like a young investor. No, bro, I'm not going to give you a deal.
Yeah.
Brandon, if I asked you for a stick of gum, would you give it to me now?
a whole pack.
No questions asked, right?
Yeah.
Box of mint, you give it to me? Yeah. No questions asked. Same thing with these guys. Like now, like the other day I sold one of my cars. Like the old me would have been like, I need the most amount of money.
Yeah.
It's worth 9, give me 9.
Yeah.
But my friend was like, can I get it for 6? I'm like, yeah, bro.
Yeah.
I don't need the 3,000. I'd rather you have it. You know what I mean?
Definitely.
Like you're a cool guy. I like you. Like I don't need the 3,000. Are you gonna make it hassle free?
Mm-hmm.
You're gonna test drive and kick my tires and tell
Yeah.
me how ugly it is and try to get a better deal, or are you just gonna give me the 6?
Yeah.
That's how these older guys are. They're like, bro, it's worth 1.2. I'll take 1 because it needs some work.
Yeah. Take tips, guys. Look for the old people.
Yeah.
They ready to make big deals.
But don't abuse them.
Don't abuse them, guys. Be respectful.
Sure, they're the elders. Respect the elders.
But we'll end the course here. If you guys want to learn more about real estate investing, make sure you guys drop a comment down. Leave us a review. We are a new podcast. We want to keep pumping it out. We really enjoy these episodes coming at you guys live. Give us some feedback. And until next time, guys, we'll see you guys on the Winners Club podcast, where if you ain't winning, we're still learning. Let's get it.
Let's go. See you on the next one, guys.
Yo, later.
Peace.